Hello, folks, and welcome back to this week's Forex commentary. And of course, this is Settle Black. So, a brief recap on last week's price action. Um, Last week we were talking about dollar index. Specifically, we had hit, our buy side, our old buy side objective, which was this fair value gap. And precisely speaking, personally, I was looking at some inverted level here because between this candle's high and this candle's low, we had some old inefficiency yet to be rebalanced. So we had that closed um, in the upper week, right? So the question was if we're going to see a continuous rally on dollar index or if we're going to see a decline in the dollar index, because in fact, we had markets hit a high time frame level, and which was pretty important because we've been looking at that level for months now. So we obviously had to make a case for it last week's trading to see if um, there was an imminent reversal on dollar index, given the fact that I was making I was stating some facts about the macro data, talking about DXY and saying data supports DXY to be bearish. Not essentially bearish, it's not that bearish, it's bearish, but it's not bearish. It's just a newly developed shift in sentiment, right? And if there's something I know from experience is that okay, now there's a shift in sentiment. It doesn't mean dollar index would, just reverse immediately, right? What it means is that okay, in the near term, we're going to be seeing DXY, have some probably crazy sell-off or a very deep retracement because currently we are in a bull market on dollar index, right? So, but then if we think about it again, how say smart money accumulated longs below this old low. So it means if you're going to be redistributing their position, that's offsetting the positions that were accumulated off of this old low here. Um, they will be doing it at a reasonable premium market, right? And basically, you can categorize premium market using old highs, or basically premium of ranges. And me personally, I'd like to um, look at old highs, rejection blocks. These are key levels. They utilize on the high time frame for accumulation and redistribution. Or sorry, distribution. Yeah. So that being said, it means the bulk of the commentary in coming weeks will just be having to determine near-term objectives so that we are trying to manage our expectations. Now, on the monthly time frame, you can see currently we are running through this fair value gap here. Okay, you can see if I put this level here, you can see how the markets are currently running through this fair value gap. And there's something else to note on the monthly time frame. Michael always talks about weeks like this. Okay, when you see weeks like this, you can treat them as gaps. Okay, and now that we are running inside this week, okay, because this is the next PD array we want to be looking at. Now that the market has efficiently run through this gap, rebalance this one, and we're seeing if we go through last week's close on the weekly time frame. Let's quickly go to the weekly chart. So you can see the weekly close last week. We efficiently closed above that monthly fair value gap. Okay, so now that's been said. So on the monthly time frame, since we can use the monthly time frame to define our drawn liquidity as well, and define key levels we expect the markets to trade off of, and and so on. I was talking about this week here. Okay, so first thing I want to do is just define the dealing range of this week here, and that's from the close of this candle to the low of this candle. All right, the midpoint of this week is about 110.53, say 110.50 level, but I'm going to make it I'm going to make it 110.53 exactly the price level it was. So 110.53. All right, and I'm gonna make this one less of what it looks like. Okay, I think this one should be sufficient for my. All right, so this is, so I've split this range. I've split into two. We have the midpoint here, and we have this range here, and we have this range. And in fact, if we want to get into more details, we can split this range here from the close here to the low here into a quadrant. So we'll be having 4 portions of it. That means I could literally split this into 2, making the lower portion a discount and split the upper portion a premium. But that's some extra details, right? But to keep it very simple, keep it very short, and let's just leave it like this. That's the midpoint of the week, and we have the low. And since that we've seen the market move with some level of momentum, okay, we could expect that prices get to the midpoint of this week first, and consequently we could potentially reach here. And the whole idea behind all of this is for the fact that we were talking about intermarket and correlated asset analysis last week, and there was a reason for that, okay? Because in as much as the dollar index got to objective, and I needed reasons to validate if there will be a continuation or not, and that's why I was talking about intermarket analysis last week, okay? And we looked at pairs like USD Swissy and USD CAD. Then we looked at the bond market, okay? So long correlated pairs have, a very obvious buy-side objective. I mean, technically, this is not one of those price objectives that, this is not the popular way of picking price objective. And I recall the lesson in short-term trading when I was saying how you define objectives. This is one of those popular techniques through which I can define price objectives, okay? It's not the regular kind, but of course you can see how we are studying markets, dealing ranges and PD arrays, okay? And what I was saying about the bond market is basically, I think the bond market still has sell-side objectives that she could potentially reach for, and correlated assets and correlated pairs have objective they could reach for to fulfill the buy program, right? Now, since that's been said, it means if DXY is correlated with these pairs, and DXY is like the barometer we use in measuring these pairs, and it could just be my own limitation that I cannot define more price objective on dollar index, and the low hanging fruit was just the close of the monthly fair value gap. But now that I see that there's still a potential for those correlated assets to reach more buy side, it could mean conversely, because those were defined logically, right? So it could mean conversely, the DXY could want to reach for more objective on the monthly time frame. So even if you look at monthly chart, you can see the bodies of these candles here, of the bodies of this swing point here. You can see there's a rejection block here, and it's one of the expectation I'm leaning on, because when I see swing points with long wicks, markets tend to trade deep into the range, in fact into the rejection blocks and stuff, right? And you can go to a chart and look at it for yourself. How do you know markets to get to a rejection block? Well, when there's a swing point with very long wicks like this, the market tends to revisit the bodies of these candles. So on the weekly time frame, last week we talked about DXY's potential to reach to continue its buy program, and I think I listed 110.20 when I was working earlier on. I think it was yesterday, I kind of like deleted the 110.20 level. So about last week's price action, okay, we saw dollar index on Monday trade lower, in and she exaggerated and moved trading lower, and in fact got very close to this old breakaway gap. Now personally, I wasn't expecting DXY to trade this much lower last week. Okay, that wasn't my own expectation. I wasn't thinking DXY would trade, and one of the reasons why I wasn't thinking that was when I looked at the bond market, even on daily time frame, there was a propulsion block formed on the daily chart. I don't know. I think I didn't expose that. It was the US 10-year yield. This was the yield, okay, not bonds. And it's still in the bond market. It was government yield. US then 10Y. Okay, US 10 yield. There was a daily propulsion block there, and it was like an easy near-term internal range liquidity that the market could just key off and continue buy side, running to buy side. Okay, that was the analysis. Very simple, very straightforward. And at the start of the week, we saw dollar index trade lower, not just lower, retraced about 99% of the previous week's range, and that wasn't my expectation. And for the fact that below the previous week's low, even if that wasn't my expectation, there was an old breakaway gap. So I needed to be sure if markets would trade into this breakaway gap or not. Okay, and that was my shortcomings last week. Okay, and while other pairs like the Swiss franc, USD CAD, the euro, $1, I don't hit key levels I was expecting in the prior week. I had to develop a new way to adjust for price action. And truth is, I don't know if I was breaking my rules trying to readjust, or I was actually just readjusting to price action, because there's always a thin line between breaking your rules and readjusting to price action, and that's the truth. Okay, so now that I have to develop a new expectation intra-week, which wasn't what I conceived at the start of the week, because I never talked about this fair value gap on the weekly time frame. Not like I didn't say it, I just didn't talk about it because apart from building up my theory in real time here, I've obviously done the work of analyzing data and pairs before starting the recording. So I didn't see DXY returning into that fair value gap. For me, it was a breakaway gap, right? And it's still a breakaway gap, because if you look at last week's candle, you can see we closed above the prior week's high. So it's showing clear bullish signal, and we're looking at the monthly time frame, see how we are currently running through the monthly fair value gap. Now the midpoint of that monthly week, that's the consequent encroachment of the week, you can see it still overlaps this weekly bearish order block, which was what I talked about last week, saying this is our new objective. We want to see the market completely rebalance this weekly sell side imbalance, buy side inefficiency. That's what we want to see the markets do. We completely rebalance this inefficiency here. So you can see the overlap between the high time frame PD array and even lows, their subordinate time frame PD arrays. Okay, and that's how we want to grade our price objective. We want to grade them in bits. We are not in a hurry. This is the next logical price objective. Now that this is the 50% of the monthly week, we could just simply readjust it here, and we leave all of those there, and we put this here. Okay, take it off the monthly chart. Okay, so now we've successfully defined, that's about 10 points below the monthly objective. The monthly objective is about 1105. Okay, and this is 11042. Now last week I was calling for 11020, because if we're going to key off early in the week, and my bias on dollar index was clear, was bullish. Okay, but my expectation on how dollar index was going to trade was wrong. Okay, the markets had something else they were going to do. So not really wrong, because I put it to the air. I was saying this daily fair value gap However she trades around this daily fair value gap will determine how I'm going to react to the market. Obviously, Monday wasn't validating none of those expectations, and the trade lower. I had to assume new expectation. Okay, so I threw it in the air because in my books, when markets hit a higher time frame objective, I should be waiting, except if I validated that the market is predisposed to continue, right? So right now, unlike last week, the market has showed its hand that she wants to continue to rally even after we keyed objective. So I'm moving with a different psychology this week. Last week was more of like a conservative psychology where I'm risk off, not willing, unwilling. So I think those were the mental blocks for me. It was something I trained myself to put. So I'm unwilling to remove those checks or those breakers because they are actually breakers. If you understand the electrical breaker, when there's a surgical overload, you know what the breakers do. We just turn everything off. Okay, so that's my own breaker, and I have no intention of removing those breakers, right? And because there will be periods when it will protect me, and that's the truth, and that's what the market will always do. Okay, um, rules you put in place sometimes they hurt you because you're missing out on opportunities. It's a psychological test, in my opinion, and you know, in periods and cases like that, the next time something like that might be happening, you might be unwilling to enact those rules, and then you now probably adjust, and you can probably have yourself to blame because in this time period the market won't spare you, and you're gonna lose money, and that's how you now worry. Why didn't you stick to your rules? Well, you 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 stuck to your rules prior, and you had a negative feedback, and that's why you didn't stick to your rules this time around. And this time around, you were actually wrong. Okay, you were actually wrong. I mean, wrong for adjusting the price action, and you'll be dealt with. So everything is just a game. You have to play it over time and determine your edge with that. I mean, that's how you determine your edge. Okay, um, a one-time thing is not enough. You have to continually process it like that, and that's the same thing that will happen when dollar index trades into this weekly bearish shadow block. Once it gets here, I'm waiting. There's nothing else I want to do. I have no interest on the short term. As soon as it hits here, I want to see how it responds to this. Will the market, continue to run through? Although if I can get in a position early enough and prices get here, since I'm bullish, I'm going to collapse some of my trades, maybe like 50% of my trades, and allow the rest to run because um, I don't know what is going to happen because that's the limitation as an analyst and trading in levels like this where you've gotten to premium of the range. Okay, you have to be very very nimble, and the only thing I can do is take my trades, leave something on to run, and then I will allow the markets to do and whatever. I'll set the outcome of whatever happens to the remaining portion of my trades, right? So that being said, then we go into the daily time frame. Okay, on the daily chart. So I think on the weekly time frame prior to this commentary, I'm not going to exclude it because the market has opened. I was looking at the previous week's high at the start of during the weekend. I was looking at the previous week's high and saying it depends on how Monday trades. Okay, and obviously from look of things, you can see how Monday's trading. Obviously, Monday's trading with woke up with a bullish opening range, right? And the opening range on dollar index is bullish. So it just shows say sponsorship in the direction of the high time frame bias already. That's what it means, really. Sponsorship in the high time frame bias. So this is a mitigation block, and this is potentially a fair value gap. I don't know how this Monday's candle will close, in as much as we're running bullish like this. Okay, I don't know if probably after the run through Friday's high, last week's high, market is going to return into the range, settle within Friday's range, and then we have some fair value gap to trade off of. But if we close bullish like this, and since we have our objective here, this would be unlikely. Okay, this fair value gap will be unlikely. Probably in scenarios where the market hits objective, they could maybe at a later time return back into this fair value gap. But currently, if this is our drawn liquidity here, that's 110.50 level or 110.40. If that's our draw, the close of this weekly fair value gap here, and someone might be wondering what level is this 11127. Well, I'm just casting my net in future. I think I'm going to take them off. If you look closely here, we are currently trading 11995. We're currently trading around here into this bearish order block. So it's likely the market seeks liquidity here, which is running through this high, and there's a fair value gap here. So there's still a high time frame, but that's the daily chart, okay? And my preference will always be from the monthly and the weekly time frame first. Maybe if we're able to validate the week on the monthly time frame, not the midpoint, maybe the close of the candle or the rejection block, then it will be easy to validate that as a price objective. And that's what I'm saying. I don't know what's going to happen when price gets here. So if I manage to get in on the setup during the week, I'm going to leave a portion to run. And if it's running, I'm eyeballing a much more higher time frame or a longer term price objective. So there isn't so much on the daily chart here, because the market is opening and expanding off of Friday's range. Of course, I wanted to see price. I wanted to trade off of Friday's range, and that's the idea. I wanted to see price. That was the idea. Before I went to bed, I knew that we're going to trade off of Friday's range and utilize, say, the previous week's high, depending on how the market opened. If the opening range was bearish on DXY, then we could utilize what's it called, the mitigation block here. So, but that is not the case. So right now it depends on Monday's closing, okay, because we don't know how Monday is going. I don't know how Monday is going to close, okay. Depending on Monday's closing, and that's how we're going to determine what levels we can trade off of. And for the fact that in fact, maybe during the New York session, I really don't know, okay, I really don't know, really, because this was one of the reasons why I favored prices returning back into the previous week's high. That's if we had a bearish opening range on dollar index, is if there's a fair value gap here, and and all of this stuff. So there isn't a price level that we could just frame our setup from, because if we're going to continue, we're going to trade off of Monday's range, and that's on Tuesday, and Monday's range has not settled. Okay, we need a settling price on Monday, and then we can now determine what key levels on Monday we can trade off of. So you can see literally we are in a very tight spot where the ranges are kind of like small. I mean, logical price ranges, except if I don't know, you just have to manage your expectation, because there are periods and commentaries where I always talk about we can expect the markets to continue here. This is like a potential swing trade, but that's not current market condition, and that's what you must adjust to. You really don't have a choice. If you want to stay on the logical side anyways. But you can say, oh, everything, and the market is going to get a rejection block. That's fine. Okay, that's fine. But I prefer to stay in the side of reason, and that's what differentiates actual trading from gambling. Okay. So this is Euro USD. Yeah, Euro USD. I'm going to weekly time frame. Okay. So Euro USD, I was talking about market returning into sell side here last week. This candle is low and this candle is low, and we went through sell side last week. And now if you look closely, there's a fair value gap here, an old fair value gap here. Okay. And when you grade the fair value gap, the midpoint of this fair value gap is this level here, which I outlined. And since previously we just traded a bit, institutional order flowing through and rally. Now I'm looking at the possibility the market returning to the equilibrium price point of this fair value gap. That's the consequent encroachment. Okay, so I'm looking at the consequent encroachment of this weekly gap, and we can see the weekly opening range just continue from last week, which was Friday, and and everything I just said on the index, because it gets really tricky. Imagine talking, and after the run below Friday's low, the market just returning to the range, creating this fair value gap, and then now returns back in the gap. That would be messy. So that's why we have to be careful. I'm still not trading Monday, regardless of if we have a confirming opening range. Okay, this confirms prices trading in direction of the higher time frame bias. Simply, this is what it confirms. And now that our objective on the weekly time frame has not been met and daily time frame is still one-sided, okay, this really just tells that euro is bearish. You have your daily time frame confirmation, but the only thing I do not have is what key level I want to trade off of. Will I have to adjust to lower time frame levels and stuff? And that's why I need Monday to do. I need Monday to just close. I need Monday to close, and I can trade off of Monday's range on Tuesday. And trading off of Monday's range could mean I'm trading above Monday's high, or I'm trading within Monday's range. Okay, so that's put the conclusion to this commentary. We're still on bias. I mean, we did the work last week in defining if we're going to see a continuation on dollar index or not, and we completely defined that on dollar index last week using correlated pairs, intermarket analysis, etc. So I hope you found this one insightful. Kindly share with friends. I'm going to post on my YouTube channel, and do well to subscribe, leave a comment, ask questions. I'm responding to people asking questions, and until the next video.